All right, guys and gals, back in the action once again. Hope you had a great break, but it's time to get back to work here this evening. It's Monday evening after all. It's April the 6th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help us find the best entry setups coming for tomorrow. That's Tuesday's trading session, and I have a jam-packed video in store for you guys and gals tonight. The charts are all ready in the background. We get some oil, some S&P, and some gold. Got a bunch of big, strong runs on the charts today. We'll talk about the best way to trade those runaway strong trends here tonight on the video, but I also want to make sure you know the lay of the calendar this week. We get some big news coming tomorrow, some bigger news coming later on this week, and a holiday weekend coming right around the corner. I want to make sure you know how that affects us as we go into the next couple days in our trade room. So the charts are all prepped up. The calendar's all ready to go here for this holiday shortened week. I got you here with me. I'm locked and loaded. Before we jump into the video tonight, though, I just want to remind you, if you're here for the first time, make sure you subscribe to this YouTube channel. I don't want you to miss all the good stuff we publish every evening. So subscribe, and don't forget, if you have any questions tonight, drop those questions in the comment section below. I'll circle back after we hit publish, and I'll answer all the questions. And how about those thumbs up today? If you follow along every evening on this video, if you tune in every evening, show the love by hitting that thumbs up button for me. I'd always appreciate you guys tuning in and spending an hour here with me every evening on this video newsletter. But enough of the introduction. Let's get this party rolling. I'm a few minutes late here tonight on the video, so I do appreciate you guys and gals waiting around here for me. I'll try to be as quickly as I can throughout our calendar, and we'll get into those charts. Jumping in first tonight, though, I want to make sure we look at the lay of the land here this week. We're going into the second week of the month of April, and of course, we're out of the high volatility times of the end of March and the beginning of April. Now we have this, what is usually a bit of a quiet second week of the month. Historically speaking, the second week of the month is oftentimes very quiet because we're through the volatility of the end of the month. We're not quite into the third week of the month when options start expiring. So second week of the month is oftentimes a little bit of a sleeper. This week, though, I doubt that is the case here this week. The world continues to really watch closely as this virus spreads throughout the different corners of the world right now. The markets are really watching that closely. So we always anticipate some sluggishness this second week of the month, but again, I don't anticipate much of that at all this week. I would expect, as we get more updates from Asia, from Europe, from the Americas, I would expect there to be a lot of catalysts that are going into the market here this week. So don't exactly count out this week. I do want to make you aware, too, of the last couple days of this week. Friday is what's called Good Friday. This Sunday is the Easter Sunday. So Good Friday is kind of an interesting holiday. It's the markets are closed right now. They'll have news reports coming out, but markets are closed up on that Good Friday. Of course, it's Easter Sunday. We've got a full week ahead of us next week. We also have an early close on Thursday. So we definitely know that the meat and potatoes here this week are going to be tomorrow, Wednesday, and that first half of Thursday. You can really anticipate now the next 2 days are going to be where most of the business gets done. A lot of professional traders, they're not going to have a very big window on that Thursday, and I'll bet you're going to see a lot of people that are going to, keep in mind, Easter Sunday, a very you could easily argue the biggest Christian holiday of the year. I would expect people to be a bit distracted by that. Now, obviously, we're all quarantined right now. We're all in lockdown, so I'm not sure how much of that will be. So, we have kind of a captive audience at our desks right now. But I would anticipate, though, kind of a half day on Thursday. People may decide to do the Easter thing a little bit early on that, right, Thursday evening into Friday. So most important thing right now, Tuesday, Wednesday, the first half of Thursday, that's where you're going to make your bread, right, as we go into the early close on Thursday afternoon. I believe the early close is at 2 o'clock Eastern time, not AM, right? 2 o'clock Eastern time. And again, we're closed up. We're literally closed. Nothing is trading in the U.S. And Canada on Friday, the 10th of this month. So got a really condensed week here. Normally, this would be a pretty quiet week ahead of that Easter holiday, but I wouldn't go betting against some volatility here this week with the spread of this coronavirus. Now, as we look deeper into each of these days, the next couple days are really going to be important as far as the updates we hear about this coronavirus. If you tuned in last night, I was talking about this last night or this morning in our trade room, there is a markedly optimistic tone coming out of places like Italy, where they're finally starting to see this curve flatten out. And if you watch the press conference in the U.S. last night on Sunday evening, which I happen to be tuning in, just curious how things were going, and there was a remarkably optimistic tone from the U.S. President Trump, the head of the CDC. It honestly felt like they knew something that they couldn't quite tell us yet. But just to look in their eyes on Sunday evening, if you saw that press conference, that really made you think that we're seeing some, whatever it is, some potential good news coming. And I'll tell you, the markets saw that today and they responded, didn't they? Right? We saw how those markets raced higher in the evenings today. We felt it last night on this news, on this press conference. And again, I would think the next couple days, we're going to get we should be getting either some alarming news, because, there is going to be that blow off top here in the U.S. for new cases. But at the same time, though, I would anticipate the next few days here, we're going to see some breakout catalysts, some news events here, some headlines that may surprise us, may confirm, might be good stuff, might be some bad stuff, but something I had a feeling watching that last night, something is going to be happening here. I don't think it's going to be that lazy week that everyone's expecting here this week. So, will that curve start to flatten out? I think the next couple days, we're going to start to see more updates on this. Keep in mind, in Italy, we had that kind of false top, that blow-off top, almost like a head and shoulders. And it seems like right now the U.S. might be somewhere down around that first shoulder, where we're starting to see the new cases start to even out. I wouldn't count us out yet. They've warned us here. The next couple days here are probably going to be the worst that we get, but they're not watching those deaths, right? They're watching the new cases coming in. So again, I don't want to beat a dead horse on this. You guys can tune into whatever your favorite news station is on that and see the headlines there. But just the tone of the market, the tone of the market today, the way the news headlines came out yesterday, it feels like something's coming here, and that is definitely something that is a known unknown. There's a markedly optimistic tone in the markets, and among all the officials right now, they're telling us to expect the worst next couple days, but at the same time, though, they get a big smile on their face when they say that. So it does lead me to believe we will be seeing some updates here about that curve flattening. Now, Wednesday, be aware on Wednesday. Wednesday is the last full day of trading. You've got that oil report right on 10:30 on Wednesday morning, and then Thursday. Thursday has potential to be a bit messy, but again, with the early close, we should be watching for that first half of the session. Keep in mind, on Thursday, you've got Powell speaking on Thursday at 10 o'clock. You've got OPEC with that meeting. Remember, that OPEC meeting was supposed to be today, and they pushed it back till Wednesday, Thursday. So, this really solidifies to us the next couple days are really going to be important, because you've got Thursday Powell, Thursday OPEC, early close on Thursday, markets closed on Friday. Something's coming. Something's coming. The next couple days should be some of the best trading we get all month. I'm very excited about it. As far as news goes tomorrow, that JOLTS report is definitely on my radar. And as always, we'll be in our trade room, 8 o'clock Eastern time. We'll get the charts all prepped up. We'll go over our patterns, and we'll have a front row seat for that 10 o'clock Eastern time. If you could only be at your desk tomorrow for an hour, I would say be there by 9:45 to get things prepped up and stick around till 10:45. 105. That's probably the best time to be a trader around that JOLTS report here tomorrow. And don't forget, every morning at 8 a.m. Eastern Time, we do all of this together in our trade room. So we're going to go over the plan tonight. We'll trade together tomorrow at the opening bell, 8 o'clock Eastern Time in our trade room. I'll put all the membership information in the description of this YouTube video. That way you know where to get registered. Let's not waste any more time, though, here. I said I try to keep the introduction short, but I wanted to make sure you know all the moving pieces here for this week. All right, we got some oil, some S&P, and some gold. Had a lot of runaway markets here on this. I got a lot of good stuff to talk about on crude oil. I'm going to make you wait on that one until it's close to the end of this video. Let's grab the S&P right now. This was exactly what we kind of expected today. Like I said last night, I'm watching that press conference, and I can see a smile on all their faces. You look in their eyes, and a week ago, they all looked defeated, didn't they? Every one of the press conferences a week ago looked like the world was coming to an end. A week later, you can see a markedly different improvement in their overall body language and attitude, and the markets certainly responded with a very strong run. Now, anytime I see, the first thing I look at on this chart, we know we're bullish. I don't think that's the question right now. I think we know we are obviously bullish. But the one thing that we didn't see today, I think, is the most important clue. We never saw that deep pullback. We never saw that deep pullback. Every time they got an inch below the moving average, the buyers were all over them, right? They were all over this market. And again, like I mentioned earlier, I think a lot of this probably came from the almost certainty of another stimulus package talking about in Washington. And of course, at the same time, that optimistic tone that we saw over the weekend about these new cases obviously flattening out in Italy, and now starting to see that in New York City as well. Thank goodness, right? Thank goodness. What a scary time it must be to be in those states, those countries during this really scary time. So we know we're bullish. In a bull market, I want to be a buyer at support levels. But again, that one big giveaway here, and that is there's no deep pullbacks. I didn't see any deep pullbacks. So, when I see a runaway market like this, eventually you have to think at some point the buyers will take profit. At some point you'll see sellers come in and try picking a top. At some point we're going to see the buyers who didn't get in on these moves, and they're going to get right, and they're waiting for that next pullback. So what you want to remember is that trends don't last forever. In my experience, most trends are going to go 1, 2, 3 into some sort of range. Now, every once in a while, you'll see really big legs, and you only get 2 of them, right? Sometimes they're really small legs, and you see 4, 5, or 6 of them. Most of the time, though, you see 3 legs into a range. Another very common scenario is a strong first leg, and then 2 legs up. I think that's what we're seeing right now. You've got that real strong first leg up, that second leg here. That tells me there should be a lot of profit taking up here. There should be a lot of bears up here trying to pick a top right at these highs. If I look left, you could easily see we're right up around that big top that I mentioned last week right here on the chart. So I think it's pretty easy to see here at this point now that we want to expect some sort of deep pullback here because the markets just aren't going to keep going forever. Now, if they do keep going, my next level up top here, 2,700, get that runaway zone around 2,705. But the most important thing right now is I want to find some levels of support that I can trust. Now, in a bullish trending market, anytime I have a trending market, I'm always looking for channels. There's a couple channels here I want to bring your attention to. We're looking for support levels. The first channel is this narrow channel here. Now, anytime I have a narrow channel, this of course is a spike in channel. Okay, it's a very narrow channel. Narrow channels always tell me to expect a deep pullback because there simply isn't a lot of open space inside that channel. And to get to kind of simplify it, traders would much rather wait for a deep pullback so they can buy low. Most importantly, though, they can risk small to earn large. So narrow channels are great, but after you get a little further up the line here in these narrow channels, again, buyers are going to start growing weary of buying high. They're going to be looking for some relief off this expensive price and look for a chance to risk small to earn large. This is also, as you can see here, if I take this trend line and bring it down to that major low from late last week, early this week, you'll notice this just looks gorgeous. What a great hidden channel here. It's kind of a midline right in the middle there. Again, we expect these runaway markets. Markets aren't going to go forever. They may feel like it, but most of the time, two big legs, we're going to start seeing a pullback or possibly see a trading range. I like this hidden channel as well. And what a great little cherry on top there. I draw that trend line off those lower lows. There would also be one back here, but that'll be a little bit too much of a pullback there. I think there'll be a bear market at that point if we get all the way down to that 25-40 area. I like that trend line here. And so I'll tell you, you put all these clues together, you've got a narrow channel. Narrow channels tell me after a while they're going to start getting a little top heavy. Buyers will take some profit. The price will pull back, and we might get our spot there to buy. I also like the fact that we can combine those two trend lines along with that support trend line there as well. I really like this whole area down around that 2600 area. And so at this point now, I want to start kind of planning my setups here for tomorrow. I don't want to buy high right now. That's one thing for sure, because I'm right up around those major tops. So what would be a couple of setups to watch for here if we could get that nice deep pullback? Now, at this point, we're looking at some key support levels down here. And so if we can get a nice deep pullback, a lot of times it'll be a 1, 2, 3 move, or what I call a two-legged pullback, right? These deep pullbacks give you two legs, 1 and 2. In that situation, I'm going to mark up that trend line. I'm going to look to trade it off the bounce off that trend line. I call this a two-legged pullback pattern, or a 2LP. Now, keep in mind, you're trying to combine the low of these channels, right, along with that entry setup. Now, we may not see that 1, 2, 3 move lower. It may just simply pull back down to the low of that channel. If that's the case now I can look for a seller failure off the moving average. Anticipate as this market makes a run lower, I can look for now bears to think this market has reversed. Remember, all these buyers who are still waiting on that deep pullback, they're going to see that deep pullback and they're going to be salivating over the ability to get in on this. At the same time, though, I would imagine a lot of bears will come in. They'll try to sell that pullback, and that will tell me exactly where their stops are. We know we are bullish. I want to buy at support. I'm always looking for, in a runaway type market, I'm looking for what looks like a reversal, and we'll talk about what a reversal looks like in a moment here. I'm looking for what looks like a reversal to try to rope in some of those counter trend. Usually these are inexperienced traders, and I'm looking to buy literally right into those stop losses. So once we see the bears sort of commit to it, now we know where stops are. We're buying into stops. We're buying the pullback to the moving average before we go back up and retest that high. This would be kind of the ideal setup here for me tomorrow as we pull back off that high. Now, like I said earlier, this may end up being a much sharper pullback here because of this runaway type of, this runaway type of market right now. And so we may see that pendulum swing back in the other direction. If this thing really takes a bath in the overnight, we really see a strong move down here right now. I'm still in the market to be a buyer, but now I've got to respect that momentum, and I'm looking for a nested failure. Now, nested failures are really simple patterns. The idea behind them is that when we see a strong, real sharp pullback now, bears try once, bears try twice, you're kind of effectively allowing them to dig their own grave, so to speak, because now their stops are just a sitting duck right above those highs. This now usually will snap back up. I'm looking to buy right into those stop losses. And then oftentimes, as they're making their way back up to retest those highs again, we see another pattern called a two-try trap pattern. Okay, one of my favorite patterns when I'm running out of open space is a trap setup. So again, it's a nested failure, right? It's a nested failure into what I call a two-try trap pattern. Now, guys and gals, if you're here for the first time right now, don't forget, we're going to trade all these together tomorrow in the trade room. If you can't be with me tomorrow morning at the opening bell, the next best way to learn all these patterns is to grab the free trading course. I'll put a link up here in the upper right-hand corner for you. Grab that free course. That way you'll be able to get the most out of our time together every evening on this video. And again, tomorrow morning, we'll be doing it together in our trade room. I'll put all the membership links, like I mentioned earlier, in the description of this YouTube video. Now, I know what you're thinking right now. So we get this deep pullback. At what point do we become a bear market? If we can get a deep pullback down around this 2610, 2600 area, and then we can get those bears to hold the pullback. See, a lot of times we get these strong moves down, but the bears, they can't hold it, and we end up going right back to the top again. And we talked about this on gold last week, throughout the newsletter last week. We talked about this over and over again. So if I do get a strong move lower here, if the moving average comes over and they can hold that pullback, well, now we're bearish. Now, just like that, we're a bear market. I call this a 1, 2, 3 reversal. It's a very simple idea here. I don't trust the first sell because a lot of times it'll fail and go right back up to retest the high. We've talked about why that happens already. But if they can hold that pullback and really get me some momentum off that low, off that moving average, now we know the bears have it. And at this point now, I'll mark up my low. I'll mark up a new high. You'll notice I like to draw the channel off that big high, not the most recent high, and that's going to give me now my sweet spot. And that's now where I want to get pretty aggressive on that. You know, what I always talk about in the newsletter is you've got to be patient, trying to sell, obviously, until you don't. Then it's time to go to work and put on the aggressive trader's hat and get short off of those highs. Now, I'll be honest, sometimes we get a 1, 2, 3, and it just takes a nosedive. You know what I mean? Sometimes the buyers see it coming and they just walk away and the thing tumbles. If it really tumbles, you know what I mean? If it really holds that pullback, and really tumbles lower here, I start looking for another pattern, which just talked about briefly, which is called a two-try trap. Very unique patterns. They always start off with a strong move, real strong move here. What I like to do is I like to grab a trend line and try to combine that again for those kind of hidden channels there. But the key is to get that shallow pullback, and it will usually be a trap high just above the high of that channel. And again, there'll usually be some sort of resistance line up there for us to sell off of. And of course, the objective, the target, if these bears can do that, if the bears can take control of this, the objective is to go all the way back now to that weekend gap. Now remember, that gap, we have seen these gaps many times over the past couple of weeks. We're going to leave that 24.80 and a quarter. That's the close from last Friday's session. We're going to leave that right on there all week. And that might end up surprising you later on this week. We'll know more about this, obviously, here tomorrow. Now, another way I like to trade these kind of runaway moves is, again, you've got to anticipate with all this move going higher without any shallow pullbacks, we may not see an appetite for buyers to keep buying, and with that oftentimes comes a trading range. So if a lot of buyers feel like we're almost out of the woods on this virus, you know, people don't want to miss out on making that big move back up to historic highs again, I could easily see how buyers might justify holding on to positions but not getting out of positions. And that would cause the market to go sideways. If we get a sideways range, anytime I say the word range, what do you think of? Balanced, sideways, failure patterns, and breakout patterns, right? Failure patterns are the key to range-bound markets. Now, once we know where our range is, we'll take the size of that range. What I'll do is once I know the range size, I'll size it up. I'll find what I call range expansions, and we'll find those areas of support down below. Then, once I know where my support level is below that range, then I look for that failure pattern. I want to buy underneath the range. My favorite way to do this is to simply look for those seller failures coming off the key level of support again, and looking to literally buy into those stop losses. So not a lot is different if the market goes sideways. We're still waiting to be a buyer off support levels. But again, the key though is once you have the range, then I can use that range to help me find my key levels of support, and I can use those levels of support in combination with seller failure patterns under the moving average and underneath that trading range. Now, what if they keep going higher here? If we keep going higher, you know where we're trying to go. We got that big round number at 2,700, the runaway zone at 2,705. I honestly wouldn't mind at all a 1, 2, 3 strong move up, mark up my new high, and getting long off that new hidden channel. I wouldn't mind that at all. I do need to see some proof though. I don't think it's appropriate right now to be buying right here because again, look left and we're right at that major top. But if they can show me some proof that they have more appetite here, there's no reason to be scared. You know where they're trying to go. Just make sure you mark up your channel correctly and get that buy off the low. If it doesn't pull back here for us and it just runs, keep your eyes on that 2-try trap pattern, because after all, 2-try traps or trap patterns overall are my go-to whenever I'm worried about buying too high, right? I don't want to buy too high. So when I see these runaway trends, right, just to recap, when I get these real big, runaway markets, we know that eventually buyers will grow weary of buying. Eventually you'll see profit taking. Eventually we'll see that deep, deep pullback. Will they hold that pullback and reverse it to go back down to that low? Will they fail off that deep pullback and we snap back higher? Will we go sideways? We've got all the plan all put together. Don't forget, make sure you register for that free trading course to see a lot more examples of these patterns and come out and trade it with us every morning at the opening bell. All the links there are in the description of that video. Let's keep going here. How about some gold right now? Gold is in the same situation as the S&P. Get a strong bull run up on the gold here. Right, strong, very strong. The last couple days have been very strong here right now as we go higher. You can clearly see the overall bullishness in this market right now. I can also, just like on the S&P, I can see we're kind of up in the nosebleed seats right now. We're way up around major tops. Obviously, it's the high of the year. It's kind of the high of the last couple of years right now, right? We are way, way up there right now. So we definitely don't want to buy up here unless we get some proof, right? Maybe another strong leg higher here right now. So I know that when I look at this chart, there's no question to me about direction. I know what direction we're going in. I know in a bull market, I want to find levels of support. And again, one thing you see is we haven't seen a very deep pullback really since that range back on April Fool's Day, right? We haven't seen really any deep pullbacks. We had that little shallow from the newsletter last week. But there hasn't been many deep pullbacks. So when I see these kind of runaway markets, I would expect that, yes, the market might continue to be irrational and may keep going higher here. That's always a possibility. But I do anticipate some ranges up here. If buyers want to hold, but they don't want to get out, right? They don't want to buy any more, or those really sharp pullbacks, we definitely want to be aware of when to expect a sharp correction. And this is definitely one of those examples where we haven't seen a lot of deep pullbacks. So I'm looking for levels of support. I really like the way I can go 1, 2, 3 on this. I like the look of this channel. Keep in mind, half the battle when it comes to finding channels is to think about where traders would get a good risk-reward ratio. And don't take this literally. When I say risk-reward ratio, most people think, oh, you mean stops and targets. No. What I'm referring to in this case is that, think about it. If I buy way up here, is it realistic to expect a big reward? No. Well, it might keep going higher, but that is a variable we don't know. I can't risk small for a potential big reward up here. Yes, there will always be those runaway markets, but those are very difficult to predict. And you're in way too late right now to be getting in a runaway market. This is likely towards the end of that. And again, right? I mean, we might see some news headlines. There's always potential to keep going higher, but let's be realistic here. This is not the place where you're going to get a good value for your trade. You're not going to be able to buy at a low price. There's not a lot of built-in profit here because we're way up at the highs of this range, and we've been running here without a pullback for a couple days. If I wait for a deeper pullback down here, this is what I mean when I say risk-reward ratio, right? A lot of traders are going to look at this battle zone area I've got marked up and they're going to say, you know what? I could risk 1 to make 50 here. Right, or to make 5, right? I could risk 100 to make 500. I could risk 10 to make 50. I can justify that. I can see that there's a good risk-reward ratio built into that trade, whether or not what my stops and targets are. That's why I say don't take it literally, right? When I say what's the risk-reward ratio, I mean, a broad stroke. Could I buy this deep pullback down here? And again, have the potential for a small risk compared to a big reward. That's what it's all about when it comes to finding these channels. So when you've got these big runaway markets, you've got disciplined professionals who have made a living for 25, 30 years at being disciplined, not to chase after these, and they'll wait to take those, right, to buy those dips when they get them. So runaway markets, find levels of support. Now, as I go higher here, as I zoom in on this, we talked about this earlier, right? Remember, the S&P had 2 really big legs, right? Usually in most situations, you're going to go 1, 2, 3 legs into what? Into some sort of range. Now, why? Because buyers are going to get weary of buying high. They're going to take some profit. The sellers will come in, right? You'll start seeing the market go sideways, or 1, 2, 3 legs up, sharp pullback as buyers bail on this. So we can easily see we are, and again, yes, maybe it keeps going higher, but historically speaking, this is the area where we'll be looking for a range of some sorts or some sort of sharp pullback on this. And this is a really good example. You look at the S&P, and the S&P had those big legs, right? S&P had these huge legs. So it makes sense that they only get 2 of them. Okay, the gold not so big, and we get 3 of them. Now, sometimes they're even smaller. Sometimes the legs are tiny and you might get 4, 5, or 6. So, be aware of that little gray area that comes around these kind of runaway, strong trending markets that we're seeing, at least in this example here. So I'm looking for levels of support. I've got that large channel. I love me some support trend lines. I love reversal lines. Great spot here now. This is a lot like the S&P chart. We're stacking levels of support on top of each other, finding an area on the chart where I can risk small for potential for a much larger reward. Now, knowing this, we've got to keep an eye on that 2-legged pullback, that 1, 2, draw that trend line over, get up and over, and use it. Anytime I expect a deep pullback, I watch for those 2-legged pullbacks so I can grab it without buying into it. I'm not going to buy into resistance there. I want to buy off it as support. Or we get that pullback right down to the low of that channel. Moving average comes over. We talked about this already, right? The bears will come in and they'll think this market has reversed. And it might reverse for all I know. They may hold it and we may dump. But for right now, though, I don't know that yet. This is a bull market without a deep pullback. I'm looking for bears to commit. Once we know where those bears commit to, now we know where their pain is. Right? And just like sticking your thumb in a wound, right? That's going to be painful for those sellers. They're going to get out of their positions. How do you get out of a short position? You buy. We see a profit-taking rally. Oftentimes then, once the buyers know we're back in control again, they buy the pullback, right? That next pullback off the moving average. A seller failure into a bullish pullback before we go back up and retest those highs. We also have that trend line down here. And remember, this is gold we're talking about. Gold could easily sniffle and really collapse off of this high. We may see a much deeper pullback down into that trend line area. Again, it's not a reversal until they hold it. That's the key here. Remember that? Now, once we pull back now, 1 try for the bears, 2 try for the bears. What do we call this again? It's a failure pattern. We're basically looking for the sellers to fail at holding this pullback. It's a nested failure because momentum is so strong at that point. I don't want to get too aggressive. You don't want to get too aggressive when you got a lot of bears in the market, even if it's still a bull market. You still want to give those bears the benefit of the doubt. Keep in mind, once those bears fail, this thing oftentimes torches going higher, and we see that shallow pullback for a 2-try trap, right? I would love to get a pullback right away, but a lot of times we just don't get the pullback right away. And keep in mind, too, I'm always watching for those hidden channels to try to incorporate those right off some additional level of support. The objective on this is to back up and retest the high. That is a nested failure into a 2-try trap for a retest of those highs. Again, keep your eyes on ranges. It wouldn't surprise me whatsoever. We're 3 legs up into a range. Once I know more about the size of that range, I can take that range and find my levels of support. I simply don't know what they're going to be yet, but once we see that range, then we can stack on additional levels of support. When I say range, you think balanced market, you think magnet, right in the middle of that range. What goes down will probably come right back up. What's the most reliable setup in a range? Failures. We wait for that price to pull back. We wait for those usually inexperienced traders with small 1-lot, 2-lot positions, and we can easily use them as kind of cannon fodder. We can usually use those stops for buys, kind of like a fuse to light that fuse going back up to retest the high. Some of the easiest money you're going to make is trading against those breakout pullbacks. They're trying to go against the trend, right? Combined with support levels below it, a failure pattern underneath it. And again, guys, like I mentioned earlier, I've got a lot of examples of failure patterns in that free course I mentioned linked up in the upper right-hand corner, and we'll do it together, right? You can join as a member by using that link in the description of this YouTube video. Now, what if we keep going higher here? If we keep going higher, get that little triple measured move overhead, the runaway zone overhead, I wouldn't be surprised if this thing runs higher and starts going sideways up here. So just, be aware of your surroundings right now. We don't want to be buying, right, too aggressively as we go. The only way that I would feel comfortable right now being a buyer is to go up and then pull back and get that failure, or we'd really have to see a strong move up, a shallow pullback, a higher high, and a 2-try trap. That's probably all you're going to get here that's really reliable as we go higher here, because it's going to be difficult for me to justify a, you know what I mean? Let's put it this way. If we can get enough momentum going higher, anything is possible. If you can get enough momentum in one direction, anytime we see a strong momentum move, we always know the odds are pretty good we're going to get another leg in the same direction. The question is going to be, do we see enough strength going higher here to really give us enough confidence to buy that pullback? You've really got to be careful up here as we go into that runaway zone. And again, we're up around these major highs here. Now, of course, the big question is, how do we short this market? If we want to short this thing, where are they trying to go? They're trying to go back to that 1650, that big boy range that we saw earlier on this month. That is, I think, pretty clear here. That area. This whole area down here, 1650, I would say between 1660 and 1640 will be a good magnet here for us to use for our shorts. But, obviously this is a very bull market right now, so how could I get short off the high? Well, if you want to be a bit of a gambler at this point, and I do believe it is a gamble, a crown reversal would be my favorite reversal pattern. We talk a lot about this in our trade room every morning, right? It's called a crown reversal pattern. What will happen is you'll see buyers try once. You'll see buyers try once. You'll see buyers try twice. Notice how the pattern's structured. It's a lower low and then a trap high, right? So that would be, and again, I would definitely wear a helmet on this one, and I would certainly trade a very small position size. Minimum risk on that trade, because a lot of these will fail. They're reversals. So by definition, right, they're not going to be as reliable. I'd much rather have us strong move down, show us you really mean business here, and run off that moving average. If I can get them to hold that pullback off the EMA, now I can mark up my low, I can mark up my high, and now I know exactly where I'm looking for that short off the top of that. Again, what do we call this? A 1, 2, 3 reversal into hidden channel pullback. Targets again down around that 1650 area. If the market collapses and we just take a nosedive, right? If it collapses here, if it really collapses, we go down, look for those 2 try traps. Just remember, those 2 try traps are usually going to be after you see a very strong market that feels like it's never going to stop going lower. Those 2 try traps, lower low, trap high. I always like to find some additional level of resistance to combine with them. So at this point, I think we've got ourselves pretty well planned here on the gold. Anticipate a range here for tomorrow. Anticipate a sharp pullback. Don't be fooled by those sharp pullbacks on these kind of runaway style markets, because we know that they're likely going to be eaten right up here by these bulls. Last but not least here, over on the oil. Now, oil, if there's one market this week that you gotta, I'm always an optimist. My glass is always more than half full. I always believe that a positive attitude, some hard work and determination, and you can deal with anything life or the markets throw at you. So I'm always optimistic that tomorrow is going to be a day filled with great setups. It's just kind of part of my being. But I will say, though, we were supposed to have that OPEC meeting today. It's been pushed back to Wednesday, Thursday. It'll probably be right towards the end of the morning on Thursday morning when we hear whether or not they're going to all kind of get together and do a production cut. We heard from, this is all supposedly right now, we heard from the Russians here today. We heard from the Saudis here today. And both of them said, we are in for a big production cut if we can get the U.S. on board as well. It appears that that is the one thing that they're trying to iron out right now, and that is how do they get, and believe it or not, you may not realize this, but these are the world's 3 biggest oil producers, the U.S., Saudi Arabia, and Russia. So they're trying to coordinate a monster production cut right now. We've been talking about this the last couple of weeks. The markets have really been spooked over the past few weeks. We talked about this, right, with those rumors. And of course, right, the fact that they delayed the meeting was probably why this thing collapsed here for today. The moral of the story is, with a holiday shortened week, with a big news event on oil on Thursday, and with oil's getting crushed right now with no air travel, nobody firing the factories up right now. Besides making masks and ventilators, there's very little industry going on right now. So that's really killing the value of oil here. And my only concern is we may see oil be a little bit of a floundering market here the next couple days, which we're not seeing evidence of it right now, but I just wouldn't be surprised if at some point tomorrow this thing ends up being some big range here. It does look like there's the makings of a range. We had this big jump up, we pulled back and have double topped here, so it definitely does look like there's kind of the makings of a possible range yet. I don't think I'm quite there yet. I don't think I'm quite there yet to call this a range-bound market, but I do want you to be a little bit careful here on oil. If the price action is not moving well, let's just stay patient. There's plenty of volatility right now on other markets we can be trading. And again, since they kind of kicked that can down the road till Thursday, I do wonder if oil might be a bit of a sleeper here this week because everyone's waiting to hear what that production cut will be. Now, we might hear some more rumors tonight. We might hear this whole deal fall apart tomorrow. So that's kind of the variable. We've seen a lot of times where they talk about a deal, and then, a couple days beforehand, it all falls apart. And so that could happen too, right? If that falls apart, we're probably going back to that $20 a barrel where this whole month started off from. So a lot of variables right now on oil. My only concern is the speed of this price action, the personality may be a little bit sluggish before we hear more. I honestly hope we hear some updates here tomorrow and Wednesday when I do expect to see some good catalysts in these markets. Now, real quickly here, the most important thing on oil is we got that big gap down. Anytime we see a strong move in one direction, we know we're probably going to see a retest of that low. We know that that low at 25.28 has a big old bullseye on it right now. We talked about this today in the trade room. The buyers had a beautiful, I mean, this is as good as you're going to get as far as a silver platter right there to retest that gap. Remember, that's a weekend gap. That gap will be there all week here, 29.01. It will be a magnet for the bulls. So when you combine the fact that we have this strong bear move down, whether it's a gap or not, it's basically one big red candle for me. I know that with those buyers, the buyers had it. They had these bears right where they needed it, and all they had to do was hold that pullback, and we would have had a retest to fill that gap, but they didn't. And this is really a very telltale clue here that this market is either A, very bearish and should be sold, or B, is actually inside of some sort of trading range, right? That is what this looks like here at this point. It's not the easiest of scenarios. So we know we're bearish right now. With this being a bear market, as we're looking at this as a trending market, I do want to try to find areas of resistance. So I'm marking up those lows. I'm marking up around those highs. You know me, I love to find these hidden channels because they're the ones that give me the low risk, high reward opportunities. What I love to do is use some of these swings up overhead. I'd love to get up above that channel and use that swing, up above the bigger one, right? Use that one. And as you can imagine, the size of that pullback right now, knowing what they want to do, knowing they want to get down to that low, the size of that pullback will determine what type of entry pattern I want to use on this, right? If I get that strong move up into my first battle zone, momentum is not going to be as important at that time. And because of that, I can use that classic buyer failure into a bearish pullback combination. Usually these are very similar, right? In these, they kind of line up together, right? A bull failure into a bear pullback as we go back down to retest that low, or do we jump way up? And now keep in mind, if we jump way up there, this is going to feel like a range over here, right? So if we really get a strong jump up, I want to sell the high of that range. But now that momentum is really strong, right? And what's the best way for me to kind of absorb that momentum? If it really runs higher, the only way I can really trade that thing short now is to look for that nested. Remember that one? One try for the bulls, two try for the bulls. Once those bulls try twice on the pullback, now I know where stops are, and I can sell now going back down into what we assume at that point will be some sort of range here. And we'll know more about that once we get there. Keep in mind too, that gap overhead, that's a big bullseye for those buyers. So we could easily make a strong jump up, hold the pullback off the moving average, and run. Again, they had that shot right here earlier. They had that shot. If they can hold this pullback, if they can really do a good job at holding that pullback now we know where they're trying to go. They're trying to go back and retest those 29 highs. I'll mark up the high. I'll mark up my low. We'll look to be a buyer off of that low. Or let's just say, for example, we make a real strong run. The thing really takes off to the upside here. At that point, you know where they're trying to go. You know they're trying to get that gap fill. If they get that strong run up, what pattern was it again? It's a two-try trap. We don't want to chase after it. Usually what will happen is it'll give a shallow pullback. Usually the giveaway from, in my experience, is you'll see a shallow pullback and it won't actually pull back to the moving average. And what happens is that means everybody's waiting now underneath that low. Okay? And that's called, again, I call it two-try trap pattern. I'm always watching for these hidden channels, trying to combine hidden channels with that trap entry, and I'm trying to do it before we get back up to retest the high. If you come in tomorrow morning and the market is already back up to these highs here, be mindful of where you are, right? You're right back at those recent highs, and those are pretty recent highs, right? They're very lofty for price of oil right now. I know 29 doesn't seem very high, but in the short term, it is, right? It's definitely as high as it's been here. And look at that. You can't even see them. Look at left. Nothing over there. So you can remember we were at 20, we were at $18 a barrel here a week ago. So if this thing really jumps up, just be aware of your surroundings. Watch out for those ranges up here. If we stick and we go sideways up there, just before, find that range support, Focus on those seller failure patterns. When I say range, you think balance, you think magnet, right? You think failure patterns underneath that low. That's what I'm watching for as we go higher here. Now, as we go lower, this is where things become difficult. We know they're trying to go lower. They're trying to get that 25, 28 area. Look at the wicks down here at these lows. This whole area, and in fact, I mean, you honestly could probably even expand that up a little bit into that area right there if you wanted to. It looks like they got that. And now we're pretty happy there. But, the reality is, if we, for example, if we get down here, we sit down here, we start going sideways down here, just stay away from selling too low here. I want to be selling above the high. If I see a range start to form here, I'll watch for that buyer breakout pullback and sell into those stop losses. If they were to hold that pullback and jump, I would call that a reversal. 1, 2, 3 reversal. Mark up that new channel, buy the low of that channel. I think the hardest part, though, is going to be if we get a run going lower, because you'll notice there's a big channel out here. If you zoom out a bit further on this, you can see that if the market really tries to run lower here, we might be walking into a bit of a bear trap, because if I line up these highs, bring it down to these lows, I have a very difficult time being a seller as we go lower. So you're going to really want to make sure here on the oil, you're going to want to make sure you get that 1, 2, 3 breakdown, mark that low, mark up that new channel high, and we're selling off of that high. Another potential pattern here would be a strong move down. We then see bears struggle, right? We see them once, we see them twice. We get that crown reversal pattern that we talked about on the gold. Remember gold, it was a short on gold. It's a long here on the oil. You got all this support down here. There's likely going to be a range here as well. That's a pattern we're watching for here tomorrow to get long off the low. Right now, remember, go very small position size on that. Reversals are not for everybody. So, if you're a relatively new trader, I would say stay away from those reversal patterns. Stick with those trend following patterns. They're a lot more reliable when you're brand new. So again, 1, 2, 3 breakdown. That's going to give me the green light now to start looking for a short off of those lows. And again, if these bears, if they can break through this 25 area, I mean, you've got a party going on now down to that 23. I mean, if we can get below 25, it'll be almost a guarantee we get to 23. Then you got that big round number down there. It's a little bit too early to say that. And again, there's a whole lot of optimism out there that the curve is starting to flatten out. They're going to put a deal together later this week. So, again, I definitely think we are bearish in the short term right now. But next couple hours here are going to be very, very important. Will we get that 1, 2, 3 reversal, right, and buy off of that low up to retest the high? Will we go up, failure, and back down, up, nested failure, and back down from there? Only time will tell here on the crude oil. So now we're ready to go here for tomorrow. Don't forget, 8 o'clock Eastern time, we'll be doing it together. It's so much easier to learn and earn when you do it with me every single morning. You want to get started as an advanced member. Our advanced membership has all access to our trade room, our video course, all the indicators. Again, I'll put all the registration information for you in the description of this YouTube video. Don't be afraid to call me in the office. Don't let my ugly mug scare you away. Call that toll-free phone number there on the left-hand side. I'll be happy to walk you through the entire registration process. And don't forget, if the telephone isn't right for you, use that live support tool. No matter what you do, though, make sure you grab that free course if you haven't done so already. Learn the setups, learn the strategy, come out and experience it with us every morning in our trade room. And in the meantime, get some rest. We got a busy day tomorrow. I'll be back tomorrow morning, 8 o'clock Eastern time with all the clients. I'll see you there tomorrow morning bright and early. If I don't see you guys tomorrow in the trade room, come back and see us again tomorrow night on the next edition of this nightly newsletter. I apologize. I'm a bit late here for us this evening. Thank you so much for sticking around with me here, guys, and we'll see you guys next time. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.